South Africa's economic outlook, investment potential and the future of finance and accounting will take centre stage at the Money Summit underway in Sandton. The gathering has brought together finance and investment leaders who will also assess global and local economic risks, among others. Deputy Finance Minister David Masondo and SARS Commissioner Kieswetter are among those who will address the summit. For more on this, we cross live to SABC News reporter Katlego Legodi. Very good afternoon, Katlego. It sounds like a very exciting prospect today, and I suppose it's running for a couple of days. Tell us what we can expect.
A very good afternoon to you, Nompu, and to our viewers at home. Yes, those conversations continuing here from as early in the morning to where we are in the afternoon, as we see various of those role players in the financial sector just coming under the same roof to try and just put the economy at the center of some of these stumbling blocks and impediments that we've seen over time. Growth is not something that we've seen in the way that economists would have wanted it to in the second quarter, seeing that 0.4%. And we hear them saying that there is utmost potential for the country going into 2025 to see at least an economic growth of 1%. But here they're talking about how do we actually avoid a fiscal trap that will see us actually in any way correcting some of the mistakes of the past. The structural issues is what has been highlighted as well, coming through very strongly with a consumer in mind that has been navigating an economy that has not come through for them. We know very well that the issue of unemployment as well, Nompu, is one that has been a cause for concern for various of these sectors. So we see them just coming together at this Money Summit to try by all means to discuss some of those issues. Investors here, and we see role players in the financial space here, and we see them having and breaking away into some of these conversations that will need to be held, and really in any way frank talks be had in terms of how then we can move the economy forward. I'm going to bring into the conversation now Koketso Mano, who's joining us from FNB. We saw you present there as part of the panel, and just giving us a sense of how then things have been moving according to you. As FNB, you're in the center of the economy as well as a service provider, and we know very well that the economy has not moved well for consumers that will then be your customers. Maybe give us a sense of how things have been, according to you. What have been some of those issues that if we zoom into them and we focus, then at least maybe in the coming year we'll see that 1% growth that has been envisioned. Welcome to the SABC, Koketso.
Thank you for having me. I think it's pretty obvious that the situation is dire, especially for the consumer. We're sitting with interest rates at the highest since the global financial crisis. Inflation, fortunately, has started to moderate, so that could be something that really is supportive to the consumer. We see over the next quarter, or at least 4 quarters, that inflation could actually fall below 4.5%, according to our current projections. That is a mixture of a stronger rand, low demand in the economy, but also petrol prices you've seen have started to come off, so oil prices have fortunately been supportive here. What that means is that the consumer might have more money to spend at the end of the month, right? From an inflation perspective, so cash flow. But also, that could be something that supports the Reserve Bank starting to cut interest rates, which we anticipate could start as early as this month. So that would be something that also helps consumers in terms of their debt repayments and just balancing the books a little bit. That is one area, from a demand perspective that could be supportive to the economy. But we all know that the logistical constraints remain with us. That has been something that really has weighed on growth, especially over the past decade. We're coming from a very low growth environment going into the pandemic. The pandemic did not make it worse. It actually just highlights the issues that we have. So that's where we are, unfortunately, in terms of the structural constraints within the economy. We have seen an easing of electricity constraints, but infrastructure in terms of logistics, rail, port systems, we still have some way to go. So unfortunately, that could still be something that constrains the economy. But we are hopeful that the government is moving in the right direction. We have seen some progress being made, and hopefully that stimulates confidence within the economy and structural investments.
Personal finance also being one of them, because you are actually affected in terms of how you spend this little rand or cent that you get at the end of the month, and we hear that people are not even, more or less able for this salary to maintain them and carry them all the way to the end of the month. These are frank talks as well in terms of how service providers can come through and what you've been picking up as well in the day-to-day work that you do.
Yeah, what we've been picking up, especially because we're a bank and we look at people's balance sheets, what we have seen is what started off as a risk or a downward environment for the lower end of the household spectrum. So if you think about it, most people who do not earn a lot of money spend most of their money on food. So with high food inflation, that was something that really weighed on those consumers. But the risk has not only remained in that area of households in terms of income spectrum. We've seen it shifting upwards. Even your more affluent households are also now starting to struggle with their debt repayments, right? It could be a combination of, I've been dealing with high interest rates for quite some time now. It's affecting my ability to pay my vehicle, my bond, but also services inflation has started to increase. So if you think about insurance, right? So education. So that could be something that really has started to filter through across the consumer spectrum, and we're seeing the constraints. I mean, look at the non-performing loans from the National Credit Regulator. I mean, you can see it across mortgages, across secured lending, across unsecured lending. The unfortunate thing here is that what we've also started to see from the banking sector is that as the banks have become more circumspect, not lending too much in terms of activity, in terms of volume, people are now shifting to the unsecured space or the non-banking space, right? So that has an impact on their ability to cure or, recover from this environment once interest rates start to come off and inflation starts to come off. So we're really concerned about that. Now let's get into the two-part retirement system, and I think it's going to lead us into another conversation here. We are aware that people will probably withdraw from their retirement savings. That money could be used for savings, but it could also be used for credit, to pay off credit. So maybe households see it as an opportunity to just, taper a little bit in terms of their debt load. Obviously, when we do our surveys from an investment and retirement perspective, we would say, when we look at the books, people are not saving enough towards their retirement as it is. So obviously this is a very precarious situation, but we're hopeful that households will look at this holistically and not just, immediate financial needs.
Gogetso, I really appreciate you giving us your time this afternoon. Gogetso coming through from FNB, and you hear most of them here talking about the issue of financial literacy as well as something that will move us a bit in terms of having the consumer being able to carry on with their day-to-day activities and being able to navigate an economy that has not grown for quite some time. We'll keep continuing to bring you those conversations as we speak to various of those role players at the 2024 Money Summit. Nompu, it's back to you in studio for now.
Colleague there, Katlego, Legodi.